Wait, something wrong. I'm not yet live. Friends, can you all see me? Yes, I believe I'm live now. Good evening, everyone. Yes, I believe I'm live now. All right. Good evening, everyone. Good evening, Swapna. Good evening, Vijay Lakshmi. Good evening, everyone. Let everyone join in. Let me open my note also so that. So, friends, what I'm doing right now here is we are doing a live session on SCMPE success series so that you can score maximum marks in your SCMPE examination, for which I've been doing live from last couple of days. And today the topic that we are going to cover for all of you is called as cost management techniques. Okay. Friends, if you want to attend all my future YouTube live sessions, please subscribe to my Telegram channel. Okay, the channel goes like this: t.me/Tarun_Jagdish. All right. So if you subscribe over here, you will be added to the page, and all the future updates, like whenever I go live on YouTube, I announce it over here. Or else you can always WhatsApp me on my number. In both these places, I will be available. All right, friends. Now, good evening, Vinaya. So, I'm not taking much more of your time. Shall we quickly start off with the cost management techniques part, friends? All right. Yes. Friends, I have shared a PPT on the screen. This PPT is available for all of you. You can go to my website and take this PPT. Just browse through my website. You have many useful contents which is important for all of you. If you just go to tj.com, you have various important concepts of SCMPE. You have case studies. This is basically all the case study digest problems that are solved over here. And we have a refresher course. In this refresher course, in 16 hours time, we have covered the entire SCMPE. Okay. On notes, if you see the notes over here on top, just click on the notes. Okay. You will come over here. And here, if you take SCMPE theory PPT, all the SCMP presentations are available over here. Study material theory, that is what we are going to do now. In this, we are going to do cost management techniques. All right. Pricing, lean system, cost management techniques. This is the PPT that we are discussing right now. So shall we start with this positively now, friends? All right. Here, the term is cost management. That is not cost reduction as such. Or the purpose of this chapter is very simple, which is how to manage your cost. All right. So my purpose today is in 1 hour time, I'll give you a revision of this entire chapter. Problem solving, you will have to do it on your own. All right, friends. Yes. So I go to the next part now. I'll just go to the next slide. This is the overview of this chapter. You have a topic called as cost control. Then you have a term called as cost reduction. You have EMA, that is environmental management accounting, and you have life cycle costing. Let us start with the first theory part over here. Cost control versus cost reduction. Friends, there are two terminologies that can be used from a business perspective. The first one is called as cost control, and the second one is called as cost reduction. Cost control is a more of a negative approach. Cost reduction is more of a positive approach. Okay. I can give you a very simple example of multiple businesses. I can give you the example of my own business. All right, that is the best way I can always explain things to you because I can personally relate to it. Friends, when I started my practice back in 2014 or 15, that time I hired an accountant under me. Okay. So what was the role of the accountant? This accountant was supposed to maintain Tarun's personal accounts, plus he was supposed to maintain TJ Associates, that's the firm's name. Okay, he was supposed to maintain TJ Associates accounts also. Let us assume I was paying this particular person a salary of, let us say, 20,000 per month. Now I want to increase my profit. How do I increase my profit? Either by way of cost reduction or by way of cost control. If I want to do cost control, what I will do is, after 1 year is over, I will provide my accountant less increment. If normally the market is giving an increment of 10%, I will give an increment of 5% or 2% or 3%. Tell me, is that a good way of reducing cost or a bad way? Friends, that is a very bad way of reducing cost, because whatever happens, I will end up paying, let us say, 22,500 off. Even if I'm talking about a 5%, or 5% will be even less, it will be, maybe I'll pay the accountant a salary of 21,000. But what will the accountant do? Accountant will find a better job. He will leave me and he will go to some other better company. Instead of this, I can actually focus on cost reduction. How I can do cost reduction is, okay, already Tarun's personal account, the accountant is maintaining. He is maintaining the accounts of TJ Associates. Let us assume TJ Associates is put up at Kochi. Now what I will do is, Tarun will open another branch of TJ Associates in, let us say, Trivandrum. Now what has happened? The same accountant who is more experienced, he will have to handle three particular portfolios. Instead of giving a 5 or 10% increment, give him a 30% increment, pay him 26,000. Even then, 26,000 divided by 3 if you do, per company, how much cost are they bearing? They are bearing on an average somewhere around 8,500 per company only. Am I right? Whereas if you maintain two companies earlier, per company, what was the cost coming over here? 10,000 was the cost coming per year. This way, accountant is also happy. I am also happy. A real win-win situation. So friends, one message what I wanted to share with all of you with this experience is that if you really want your company's profit to go up, rather than focusing on cost control, you are supposed to focus on what? Cost reduction. CA final is mostly about cost reduction only. I'll now share with you a few techniques that is normally used. When I talk about cost control, the two popular techniques are standard costing and the other one is budgetary control. Both are controlled. Standard cost 100, actual cost 110, adverse variance, adverse. Your half life will become miserable thinking about all these adverse factors. All right. But cost reduction is a much more positive technique, and this can be brought in using multiple techniques. Like there is a technique called as Kazan costing. There is another technique called as target costing. There is a technique called as value analysis, etc. etc. Can you write down this in your books or scribble it down fast? Total quality management, many more other. I'm just giving a few examples over here. PQM is another one of them. All right, friends, can I go to the next part now? Okay. So now here you have cost control and then you have cost reduction. Inside cost control, there is another technique that is told over here, which is called as Pareto analysis. It's a very, very interesting technique and a very good technique also. Pareto analysis. All right. Friends, what is the meaning of Pareto analysis? I'll let you know. Let me draw a picture to explain this to you. What is this, my dear friends? Let us assume this is a big shop. Okay. This shop has got three areas. Area number 1, area number 2, and the other one is area number 3. Alright. Now, in area number 1, I'm just drawing, these are 3 doors. Each door should have a lock. In area number 1, this whole shop is, let us say, run by one Mr. A. Let us assume in area number 1, this fellow is selling this. What is this, my dear friends? Assume this is fish. So this fellow is selling what in area number 1? Shop number 1, this fellow is selling fish. Let us assume in area number 2, he is selling this. What is this, my dear friends? Please don't focus on my drawing style. Focus on the concept, okay? What is this? Assume this is mobile phone. Alright. Area number 3, let us assume this fellow is selling this. What is this, my dear friends? Assume this is jewelry. Now he has, let us say, this I'll call it as shop A, shop B, shop C. Let us assume Mr. A is having only one lock with him. Tell me, my dear friends, which shop, or let me not call it shop ABC, I'll call it as shop 1, shop 2, shop 3. Now tell me, friends, which shop will he lock first? Will he lock the shop 1 first, shop 2 first, or shop 3, friends? He will first lock this one, or this is what we call it as A category. Friends, here if you look at the area, it would be hardly 10% area. But if you look at the value, this actually covers around 70% of the value. Shop 2 is what he will lock second, or this is what I will call it as B category. Alright. What will happen in B category? You have 20% area covered. You have around 20% of the value. Whereas shop A is what we will call it as C category, because here you have 70% of the area covered but only 10% of the value. This categorization of a particular business is what we call it as ABC analysis or Pareto analysis. Can you write down this in your books now? Done, friends. You can always view the recording, so I'm not giving you much time to write down. Just a little bit of time to scribble down, because as I told you, in 1 hour I want to complete each chapter concept. So friends, this is a very, very useful concept for all the companies. Now, if you talk about the gold industry, they will have A category, B category, C category. A category will be diamonds, highest value. B category will be gold. C category will be precious stones, like silver will be there, turquoise, etc., etc. Many stones are what comes over here. Similarly, friends, if you go to a footwear industry, what happens is footwear has got two parts. One is the upper and the other one is the sole. Upper is the most expensive item, so that will be A category. Sole will be the B category, and they have this, what do you call it? many chappals have this components on the top. I don't know what you call that components. Some design components, glittery jimki items, etc. That will come as a C category. All right. Same way, if you go to any business, friends, every business will have something of core, some other things of not very core. Now, if you talk about a ceramic industry, you can have ceramic tiles are there, wash basins are there, etc. is there. You will be surprised to know, friends, in a ceramic industry, wash basin and toilets are the most expensive things. Friends, when I went to do my upper house renovation, toilets were costing 2.5 lakhs, my dear friends. I got heart attack that day. Same way, the second category would be all the, the shower, I don't know what and all you call that, shower. I hope you understood what I'm trying to say. And C category would be the basic components, etc., which comes in a bathroom based things. Like this, every business, friends, you take whichever business you want, they will have items which are A category, items which are B category, and items which are C category. Similarly, even if you talk about your customers, friends, okay, you will have 70% of your revenue coming from 10% of the customers. Manage them properly is more than enough. So you have high value customers, medium value customers, then you have low value customers also. All right. If you talk about hotel industry, okay, restaurant or hotel, or let me call it as restaurant, for them meat products, chicken, fish and ghee, cheese, all these are A category. High value, less space they occupy. All right. Then they have rice and wheat, which will fall under B category. Then all the consumables, salt, sugar, spices, etc. will fall under C category. I think by now you have understood the concept of ABC. Can you write down this? Liquor. Yes, Swapna. If you're talking about a bar, then I think we'll have to categorize the brands also like that. Backpiper whiskey will be the cheapest. All right, friends, can I go to the next part now? Yes, so we are learned with the concept of Pareto analysis and we learned the concept of cost control. EMA, I will come to it in the end. All right, let me go to this area of cost reduction technique now. Inside cost reduction, you have a concept called as target costing. Let us learn that concept now. Target costing. Let me explain this to you with the help of two people, Mr. A, Mr. B. Let us assume Mr. A is selling tea. So what is the calculation of Mr. A is selling tea from many years, 10 years, 12 years, etc. So when Mr. A is selling tea, Mr. A will do a formula like this. Cost of making chai, milk, sugar, tea powder, rent, overhead, etc. is, let us say, 5 rupees. He will add a profit of, let us say, 2 rupees, or let us say another 3 rupees. And his selling price of the tea will turn out to be how much, friends? 8 rupees. Now suddenly what happened is Mr. B opened the shop next to Mr. A. Now to compete with Mr. A and to give Mr. A lot of trouble, what Mr. B is doing is Mr. B is selling tea at the rate of 7 rupees. Suddenly what happened? Customers who used to come to Mr. A slightly started deviating to where? Mr. B. Now Mr. A has to somehow come to a solution. Mr. A cannot do like this, cost 5, profit 3. That is why my selling price is going to be 8 rupees. No. What Mr. A will have to do is Mr. A will have to come to a target costing method. So I'll use target costing method. In target costing method, what Mr. A will do is first Mr. A will put the selling price. So how much is the selling price that the Mr. B is selling at? 7 rupees. All right. Then he will put what is my target profit. How much is the profit that Mr. A wants? He wants a profit of 3 rupees. Therefore, what should be my target cost. 7 is the selling price, 3 is the profit. So my target cost will turn out to be how much now? 4. But what is my actual cost? I'll take a fresh page. Target cost is 4. What is the actual cost? 5. So how much is the cost reduction that is required over here? Do you get a cost reduction of 1 rupee over here, friends? Now to do this, there are multiple ways. What are the multiple ways? I can either use, I can either reduce the milk that I am using in the tea. I can use cheap labor, or I can use the modern techniques such as casein costing, TQM, blah, 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 etc. This methodology is what we call it as target costing. So in real life, you cannot do cost plus profit is equal to selling price. You have to do target selling price minus target profit will give you the target cost. Can you just scribble down this in your books now? Done, friends. Can I go to the next part now? Wait, you have to just scribble down this also. So I'm giving you all the concepts, then I'll show you the PPT also. All right. Fine, friends. I'll go to the next part now. Now, friends, I'll teach you another concept which is called as value analysis. Friends, this is a concept used to reduce your cost. What we do is, in value analysis, you will go to a company and you will study the process of the company. So once you study the process of the company, you can categorize the whole activities into two parts. One is called as value added activity and the other one is called as non-value added activity. Value added activities are important activities and these activities you are supposed to retain in your company. Alright. Whereas non-value added activities are those which are not very useful and therefore what are you supposed to do? You are supposed to eliminate from the company. Once you eliminate all the non-value added activities from your process, automatically what will happen? Only value added activities will remain and your company's profit will start going up. Are you all clear with this part? I will give you a very simple example for this one. This is an example of an airline industry. I think I would have given over here. In this airline, what happens is every passenger was given free food. Now, if you have flight in an airline, you would know that normally what they do is the ticket price when they ask you, they will give you food free of cost in that. In this food, they had the following. They had sandwich, they had coffee or tea, they had a plum cake, and along with this, they had an olive-based salad. Okay. Now, when they did a proper research on the food eating habits of these people, they understood most of them will eat sandwich, drink coffee, eat that plum cake, but 90% people did not eat olives. So tell me, friends, olive will become what? It will become a non-value added activity. So once they come to know that olive is a non-value added activity, what will they do? They eliminated olive. And just by eliminating this, the company's profits actually went up by approximately $75,000, my dear friends. This is a classic example of value analysis. I can give you one more example of Tata Steel. Normally, every company, what they will do? They will have supplier, they will have store, they will have a production, then they will have inspection department, and finally what they will have? They will have dispatch department also. I think I taught you this when I was doing strategic analysis. Okay, so what they did was, actually, why a store kept? To keep the raw material. What Tata Steel did was, they did a beautiful thing. They made the supplier as their store. Supplier is anyway storing, correct? They removed store, saying that this is a non-value added activity. Directly from store it is coming to the production, and they removed the inspection also. But after doing proper auditing in the store, in the supplier company, ensuring that they will get only good quality products, and this was completely automated, so defective products will never happen over here. This also they made it non-value added. So from store to production, production to dispatch. Friends, by removing this, Tata was able to give competitive prices, and all the other companies had to bend down in front of the game that Tata was playing. That is how Tata became one of the best steel companies in India. Can you scribble down this in your books now? All right. All right. Done, friends. I believe you're all done with this part. So we learned about Pareto analysis. We learned about target costing. We learned about value analysis. Now we will learn about value engineering. Okay. So I'll write down the next concept heading in your books. Value analysis versus value engineering. All right. Friends, there are two terminologies which are almost interchangeable. The first one is called as value analysis, and the second one is called as value engineering. Value analysis is done for existing products, whereas value engineering is done for new products. So here what will we do? We will find out value added, non-value added, and then what will we do? We will eliminate all the non-value added activities, right? But value engineering, we will predict what and all can be the non-value added activities, and we will remove them from scratch itself, so that you never have any non-value added process, and you only have value added activity happening in your company. That is the only difference between the term value analysis and value engineering. Can you write down this now? All right, friends, can I go to the next part now? Okay, so we are done with target costing, we are done with value analysis, and we are done with value engineering. Now let us learn about life cycle costing. Friends, every company goes through 4 steps. The first step is what we call it as introduction. Second step is what we call it as growth. Third step is what we call it as maturity. And the last step is what we call it as decline. Friends, I can give you this with a real life example of a company called as Nokia. Have you heard of Nokia mobile phones? Are they still existing or are they completely gone? If they're existing also, they are at their final phase. See, even the older models are still what is visible here. Friends, this was a phone that I had bought back in 2005, friends. I think it is Nokia 3315. So this is 3310, is it? There was a 3315 version after this that had come that was very, very popular at that time, back in 2005. Nokia is a mobile phone company which launched back in India in around 1990s. Friends, at that time, mobile phones were not at all popular in India. What was famous was people having landline phones, or there were STD booths, where you go and talk and you have to pay money for the STD booth. At that time, when Nokia came, only the high class people, very, very rich guys, were the ones who were actually using these mobile phones. Swapna, you're still using one spare? Wonderful. And that time now you have Airtel, Vodafone Idea is there, Jio is there, BSNL is there. At that time, there was only one SIM card provider which was called as Escotel. Friends, the interesting fact about Escotel was at that time the outgoing calls used to be 7 rupees per minute. Incoming calls used to be 11 rupees per minute. Okay, now incomings are free, outgoings are also almost free. That time incoming was more cheaper. So what we used to do was, if a fellow used to call me, I used to cut his call and call him back. Why? Because I'll have to pay 4 rupees less per minute at that point of time. That phase was the introduction phase of Nokia. Very, very few sales, or I can tell that sales was less, sales less, and it will be in losses, or you will be making very, very low profits. Yes. After that, what happened is somewhere in 1995 to 2000 time, suddenly technology changed. That time, Reliance came up with a new technology called as a 500 rupees phone. I'm not sure how many of you have seen that phone. All right. Let me just check if that's available somewhere in Google. This was back then. No, only 500. This is a new Geo feature. Back in 95, yes, something like this. This was the iconic mobiles which gave India freedom. This was the phone, friends, which came up, and they say just to pay 500 rupees and take the phone. That time people started getting crazy about mobile phones, because suddenly the middle class people can also start affording mobile phones. People started buying in bulk, and indirectly, when the Reliance phone sales went up, automatically status problem will come for many. All right, they will see my workers are also using a 500 rupees phone. I should have some status. Like that, many people started buying Nokia phones. And the other advantage was, by that time, Airtel came into the picture. BSNL SIM cards also came into the picture, and the call rate started coming down. All right. This time Nokia sales started going up like crazy, friends. I think from 95 to 2010 can be the time that I would say. Then Nokia came up with a model 3310 3315. This was one of the peak models, friends. The sales went viral, people started buying left and right, and for the first time, youngsters going to colleges started using mobile phones. Then they had one more model which came up 6610 and I think 6615. Another viral model, first time color phone. 3310 was black and white. 6610 was a color phone, and at this time Tata Docomo came into picture. Tata Docomo came with a scheme that 1 second you have to pay only 1 paisa. So that scheme became very much viral, and these mobile phones started selling like hell. Nokia started capturing 97% of the market at that time, friends, which means if 100 phones were sold, 97 phones was Nokia, 3% was others. By that time, Reliance collapsed. Why? Because all the low class people were using Reliance. 500 rupees they paid, they took the phone, they called left, right, bill will be 2000, 3000, 4000. Then what these fellows used to do was they will not pay the bill. They will take that phone, throw it away in some dustbin, and they will leave away. How will you track this person now? Very, very difficult to track. Like that, Reliance also made huge losses, but Reliance was also smart. They took an insurance on this, and some Tokyo-based company ended up paying a huge insurance compensation to Reliance. Reliance became safe. That insurance company shut down after paying to Reliance the money that they were supposed to pay. That's a different story altogether. Then came the maturity part. 2010 to 2012 time, they came up with another model called as N series. This was the final peak model that Nokia had launched. After this, Nokia's downfall started because of one application, Android. The person who owned Android first went to Nokia. He went and told them, look, I have a very good technology. Once the technology of this comes into the picture, old phones will all get saturated. But at that time, Nokia was very big. Nokia was too proud to accept. They told, we don't use outside technologies, you get lost. This Android fellow that time went to Motorola, he went to Samsung, and he went to some other phones. And then this time again, I'm telling you, Nokia was holding 97% of the market share. These Motorola, Samsung, and Sony Ericsson, some other phones, BlackBerry or something like that was there. They all said, beggars are not choosers. Whatever comes, let us take it. They accepted Android. And then after 2012, this application called WhatsApp came into the picture. WhatsApp became so viral that I still remember people going to the stores and they never used to ask for Android phones. What these fellows used to say was, I want a WhatsApp wala phone. That was the kind of talk people started having out in the market. Suddenly, people started buying this. Nokia couldn't manage this change. Nokia then, by the time it took them 2 years time to bring a new technology where they can install WhatsApp and all such applications. But by the time Samsung, everyone took up the mass market left, right, and Nokia's market share fell down to as low as 5%, whereas Samsung, Sony, Motorola, Moto G, all the new brands, they took up the entire share. And this is the whole process of Nokia in the phase of life cycle costing, where you have introduction, then you have growth, maturity, and finally you have decline. I'll give you a minute. Can you write down this? I believe you are all clear with this part, friends. Can I go to the next one now? Okay. So once we are done with life cycle costing, I think the only thing left for me to cover is EMA, Environmental Management Accounting. I will explain that concept, then we will go to the whole theory slides. All right. Sorry. What happened, friends? My one note is gone. Now, I'll write down the next one called as EMA, Environment Management Accounting. Friends, there is a beautiful case study using which we can learn EMA, and the case study in your book, the name of the case study is called as Shandar Bangles. I have put a video of Shandar Bangles also in my app. I'll just show you that video. Let me take my app. Let me go to Classroom. I'll take SCMPE November Premium, I believe. Is this Premium? Yes. This overview. One moment, friends. Okay. In this video, I must have put that video somewhere over here. Six Sigma, TEDx. These are the Six Sigma videos. All right, I'll take it from YouTube and show you for time being, friends. Bangle industry in Firozabad. Yes, this was a video. This video will tell you about how we have to be careful about the environmental management accounting. I'm playing this video. Let's listen to this.
फूड वीडियोस तो हम आपको डेली ही दिखा रहे होते हैं, लेकिन आज हम आपको दिखाने वाले हैं एक ऐसी इंडस्ट्री की वीडियो जिसके प्रोडक्ट्स तो आप सभी के घरों में आते हैं, लेकिन आपको सपने में भी आइडिया नहीं होगा कि कितनी खतरनाक ये इंडस्ट्री है। यहाँ पर काम करने वाले आधे से ज्यादा लोग जवान होने से पहले ही अपनी आंखों की रोशनी खो देते हैं और हर एक सेकंड यहाँ पे आपके सर पे मौत का साया मंडरा रहा होता है। तो इस वीडियो को बिल्कुल एंड तक देखिएगा गाइस, क्योंकि ऐसा कुछ भी आपने कभी भी कहीं भी नहीं देखा होगा। अभी हमें उत्तर प्रदेश
one minute, friends. Sorry, not that one. Not a full screen. Let's just check this one. Yes, this one. Sorry, this one.
ये काम ऐसा है कि यहाँ कोई किसी का वो नहीं है, आज आ गया कल तो कल दूसरा आ जाएगा, आज मैंने कर लिया कल दूसरा कर गया। पर तो कोई और कर गया।
छुट्टी वगैरह पड़ती है, रजिस्टर्ड छुट्टी पड़ती है, त्योहार वगैरह, इतवार वगैरह, संडे वगैरह, इसके कोई पैसा नहीं मिलता आप लोगों को।
आफ्टर 15 आवर्स वर्किंग स्टार्ट हो जाती है। भट्टी में जब कांच मेल्ट हो जाता है तो उसको हम लोग लोहे की लबियों से, बड़ी बड़ी लबियां होती हैं, उससे हम लोग निकालते हैं।
I think friends, this is enough. I think I'll just share the whole thing with you now. Did you understand what's happening over here? This is how they make bangles in Firozabad. Many of you use bangles, but you never think the process involved in this. This is how they make bangles. High heat, extreme heat, sound pollution, and air pollution. Maximum polluted industry is the bangle industry. Plus, from what you hear in this, people who work in Firozabad, they even children work, child labor, they are going on child labor. They are having no Sundays leave, etc. High pressure is under which they are working. That is when we come up with some of the, a learning that is called as EMA or Environmental Management Accounting, where they say that every company should be environmentally responsible. Very, very important. They have to be environmentally responsible and they are supposed to present some accounts about how they are actually taking care of the environment. Okay, so for example, they can do multiple things. They can come and tell you that they have planted this many number of trees, because once you plant trees, automatically what will happen, sound will get absorbed, you get better air circulation coming in that case. You can tell about that only no child labor is working over there, etc., etc. Like this, once you create something, that is what we call it as EMA or Environmental Management Accounting. This Shandar Bangles case study is already available in my website, friends. I have made short notes. I will show you that. If you go to my website, click on notes. Here you have SCMPE theory PPT is there. Or I think it's not in, it must be in case studies. So yeah, let's click on this. Here there are case studies, study material, case study. This is one of the study material case studies, that is what we are discussing here. Yes, these are my handwritten notes. So I have made short notes of the case study so that you can all revise it very, very quickly. Okay, so I'll just take this and let me go down. I'll take that part. It is one of the last cases. Look at this, Shandar Bangle. Okay, so if you go through this case study, you will realize that you basically have, hold on, sorry, yes, if you look at this, what you realize is that, hold on, yes, you are having three phases over here. What are the three phases that are available to you? Glass melting process is there, Parison making is there, and then the last one is what you call it as coil formation. In glass melting, the material is melted at around 1300 degrees Celsius. Then they extract, add color, convert into coil, and they form. So they have sound pollution, air pollution, furnace burning, workers work without leisure time, etc., etc. So to solve this, they are saying that you should have a environmental reporting, where you should have environmental costs coming in, such as environmental prevention cost. You learned in the previous chapter, friends, modern business environment, environmental appraisal cost, internal failure cost, external failure cost, etc. And they say one other method that can be used is activity-based costing. We have already learned activity-based costing in the chapter of strategic analysis, my dear friends. So like that, you will come to know about EMA. I believe you are all clear with this part. Now that we have covered all these things, let us in 5 minutes quickly discuss the entire PPT and we can pack up our session now. All right. First, we learned about cost control. I told you standard costing, budgetary control. Whereas cost reduction is better, permanent reduction, it can be done by redesigning the product, it can be done by changing the factory layout, etc. etc. Target costing is selling price minus target profit will give you target cost. All right. And how do you reduce the cost? Use cost reduction techniques and you can always reduce the cost. Am I right? In target costing, you have two processes: value analysis, value engineering. Value analysis for existing products, engineering for new products. Are you all clear with this part? Okay. Then impact of target costing goes like this. Normally, traditionally, what we do is we go by the following process. First, you will specify the product. Then you design the product. Then you find the cost. Cost plus profit is equal to selling price. But under target costing, do you do like that? No. Under target costing, first you specify the product, then you give the selling price. Selling price minus profit will give you cost. Once you get the cost, only then you will design. Do you see the difference? In the traditional method, designing happens first. But in target costing method, designing happens in the end, my dear friends. Okay. Now, the following questions they keep asked. Can we eliminate some function from the process? For example, can I eliminate the olive salad? Can I eliminate the store? Can I eliminate the inspection department? These are the questions that you will ask. Can I minimize the design? Can I substitute the parts? Can I use cheaper milk? Etc. etc. Can we combine some steps? Ultimate objective is what? You are supposed to reduce your cost. All right. Then they have a case study, friends. This is basically, there was a bike earlier in India with the name of Boxer. Do you remember this bike? I think it was Bajaj Boxer. This bike, they have given it in the name of case study, and the name of the bike they have given it as Kaveri. Kaveri wants to come up with a bike with a mileage of 88 km per liter. Good competition for other companies. How did Kaveri come to this? They applied target costing, but unfortunately, what happened? The input price went on increasing. So when the input price increases, automatically cost goes up. You cannot manage. And environmentalists oppose the idea because it will result in pollution. You're producing too much, pollution will happen. Durability, what will the bike, if you go through an accident, won't you suffer losses over there? Now many companies are planning to launch similar products, so they are asking whether we can repair the bike is also a question that they are having. So one of the strategies that they used over here is called as low cost strategy. But in this strategy, you face all these problems. Input price will increase, environmentalist problem, durability problem, etc. etc. I hope you are clear with this case study, friends. Now, life cycle costing we already spoke. Introduction, growth, maturity, decline. These are the features and you have to study this table, friends. Sales, first it is low, then it increase, peak, decline. Cost initially high, then low, low, low. Profit negative, rising, high, declining. Customers, initially only innovators will come to you. Innovators means people who want to try new products. Then early adopters will come. Then middle majority will come, and finally laggards will also come. Laggards means lazy fellows. Everybody has it. Let me also have it. Okay. Competitors, initially you will have no competitor. Then it will keep increasing. Then study, and then finally you will have a declining number. These are the strategies that you can use in different cases. Pricing, you can give cost plus profit in the first case because it's a research time. Growth, reduce the price to penetrate, price to match, and then you can reduce the price. Advertisement, introduction very high, growth moderate, maturity less, decline also less. Distribution, initially you have to build it yourself. Growth, you have to build a bigger system. Maturity, already it will be there. Decline, you have to reduce the distribution system. All right. So this table also you are supposed to by heart. All right. Then Pareto analysis, we learned about this. Pricing of a product, customer profits also we can do. Stock also you can do it in ABC. That's what I showed you. Quality control purpose also you can use Pareto analysis. Environmental management accounting we learned now. we are collecting the information relating to environmental cost. You are having 4 types of cost. Conventional cost such as energy cost, electricity. Hidden cost. Hidden cost means suppose there will be some bribes that you pay, or generally you keep paying some money like salary, etc. But we never account it as salary. We account it as general overhead, or we don't account it as hidden cost basically. Then you can have contingency cost. Tomorrow Shandar Bangles can get a penalty for harassing the workers. We never account that. Relationship cost. This is basically, it can be bribe or cost to maintain relationship with the government. Are you all clear with this part now? Okay. So these are the following techniques that they use in environmental accounting. Input output analysis. If you put 100 liters of cold milk and you heat it, you may get 95 liters of hot milk. That is a simple example of input output analysis. So in environmental accounting, you can plan, if I plant 10 trees, pollution will come down by this much. Okay. Flow cost accounting, this is basically drawing a chart of how you can reduce the environmental damage. Life cycle costing we already learned. Activity costing we have learned in one of the earlier videos. You can check my YouTube channel for the previous video, friends. All right. One more case study is there. Xerox. Okay. Xerox used life cycle costing. They had a photocopier. They took it on lease. Machines was packed and shipped. Customer used to tear it. All right. I'll tell you this with a diagram so you will understand it better. Xerox will have printer. Assume this is printer. They will put this in a box and send to the customer. What customer will do is, he will tear open the box, and after tearing it open, he will just put it in dustbin. Now to reduce the cost, what Xerox did was, it came up with a concept called as tote. Xerox machine, it will be put in a metal box, given to the customer, and they will take back the metal box. Now what happened? There is no wastage. One advantage. Second thing, the tote can be reused for future customers. Like that, they made profit. Friends, this is similar to Pepsi. Pepsi is giving plastic bottles also, glass bottles also. Glass bottles they take back. Plastic bottles results in higher amount of waste. So this was a classic example of value analysis where they eliminated a non-value added activity. Are you all clear, friends? With this, we are done with the chapter of cost management system. Let me take the study material now and show you the important questions that you are supposed to study. Friends, the concept that I taught you, now you can go through the study material theory. All the points are already covered for you, okay? Textbook, they must have given it in a much more elaborate manner, but everything is covered over here. I'll tell you the questions which are important. All questions you should do, okay? I'm just giving you the important questions. One is important, it has come in exam 2 times. Question number 1. 2, you can work it out 1 time. It is a Pareto analysis question. 1 time workout is enough. 3 also 1 time you work out is enough. 4 came in the exam. This is an examination question. Mark it as important. Mold and dies, life cycle costing question. You can do this also. This is also a good one. You can work out this question also. Mark 5 also important. 6 not important. Do it 1 time is enough. It will never come in the exam. It's a very, very long question. 7 good question. Work it out. It came in the exam. Question number 7 is a past examination question. 8 very good question on. This is a tough question also. Very good question. It's a combination of cost management system and strategic analysis. They are using activity based costing over here. 8 mark it as important. That's it, friends. So I believe you are all clear with this part now. All right. If you have any doubts, you can WhatsApp me, or if you just click on classroom and register over here, you will be added to 6 batches, friends. One will be case study digest, very, very important for the upcoming exam because they have started asking questions in the previous this thing. Concept revision also you can do over there. And apart from that, you are having SFM based concepts also free of cost available for all of you. All right, friends. I hope this session was useful to all of you. Thank you so much. Have a nice time ahead. Take care. Thank you so much, everyone.